Do this. Thank you, everyone. It's a real honor to be back at Milken. I was here last year, but I must admit the people here this year are a lot more attractive, in fairness, and look more intelligent. So it's great to see an improvement there. I'm Neil Cross. I'm the DBS Chief Innovation Officer, and I've got some legends in the fintech and innovation space with me today. And we're going to dig into some of the hard questions around fintech, and if we've got time, we'll take some questions from the floor. So please find really, really hard answers, but don't ask me, ask the other people if you've got really hard answers. They can answer those. So kicking off, let's find out a bit about our panelists today. So Sahil, would you like to go first and talk about yourself and what you do in fintech?
Absolutely. I work for a venture fund in India, based in Bangalore, called Aspada. We invest in a broad variety of sectors, but financial services is of particular interest to us. We've made 4 investments in this space, primarily in non-banking financial institutions, balance sheet lending institutions. I also was a volunteer with the Aadhaar project, which is the world's largest identity database, biometrically linked. And I currently work with iSpirit, which is a working group that builds technologies on top of Aadhaar for financial services and a bunch of other sectors. So I'll be showcasing a bunch of interesting leapfrog technologies that India has been building as public digital infrastructure, and that's going to be something that I'm sure you'll be very excited to hear about.
Yeah, it's pretty impressive, that Aadhaar. It's up to, almost 1 billion people?
It's crossed 1 billion in 6 years. It's launched in September 12th, 2010, and so we're, exactly 6 years roundabout now. We crossed 1 billion about 4 months ago.
So even, faster growing than Facebook almost?
Yes, actually, yeah. If you consider the first billion. Yes.
Excellent, okay, thank you. And next up, we have Dave McClure, who claims he has 500 startups. Is this true?
I think at this point, probably 500 dead startups, but we're probably the world's most active individual investor in companies. We've invested in over 1,600 companies in the last 6 years. Probably about 80 or 90 of those are in financial services. I had the good fortune to spend a few years at PayPal before going public and getting acquired by eBay. Worked with Peter Thiel at Founders Fund for a little bit. We were an investor in Credit Karma. Actually, we were one of the first investors in the seed round in Credit Karma, and I was a personal angel investor in Mint, Mint.com.
Oh, wow. Impressive, very impressive.
And I got approved for a home loan last week, too, also.
Congratulations.
Yeah. Was that with DBS by any chance?
I don't know. I should find out.
Yeah, there we go. If it was really quick, it would have been DBS. I'll just point that out. I suppose I should do something about DBS. We do a lot of work with FinTech. We've run 7 FinTech accelerators in the last couple of years. We scan about 1,000 FinTechs a year, and we actually deploy quite a lot of FinTech at the bank. We've put in about 10 different FinTech systems. So we're very aggressive. We're seen as one of the leading banks in FinTech. But in fairness, it's like being the fastest guy in the slow race. Our industry is particularly slow in that regard. Moving on. John Medved, would you like to introduce yourself, what you do in FinTech?
I'm John Medved. I'm the founder and CEO of OurCrowd. We're the world's largest equity crowdfunder. We've got about 15,000 accredited investors worldwide from 110 countries. We've deployed in the last 3 years about $300 million into 100 different startups. We're working here in Singapore with UOB Bank. We've announced a partnership with them. And we just received a license from the MAS to operate here, so we're very excited about coming to Singapore and working more broadly in the region.
Excellent, okay, thank you. And I think the next guy needs no introduction. He's always on the television, or especially after the other week. It was good fun. We were on a panel together. It was the funniest panel I've ever been on. My good friend, Sopnendu Mohanty.
Thanks, Neil.
That's okay. Tell us about yourself.
Yeah, so I spent 18 years with Citibank before, and last 2-3 years I was fighting with the compliance officer, and I realized I should move the other side, so I joined the MAS. So I joined MAS as the Chief FinTech Officer to drive policies and sector development on FinTech. And I hope last 13 months have been remarkable for all of us. And we do discuss over emails, cocktails, beer, and things get sorted out.
Yeah. Okay, thank you. And he does normally dress like this. It's quite a surprise, and he works at a regulator. So, finally, we have the mighty Chris Way, who's a leader in the insurance space. So give us a quick intro, my friend.
Thanks, Neil. By the way, nobody briefed me on the dress code, otherwise I would be dressed like that.
Yes.
Quick introduction on Aviva. Aviva is one of the oldest financial institutions in the UK, 320 years old, 60 million customers, number one domestic underwriter right across the composite. I think what we've done in the UK in particular that's interesting to people is we've totally separated our digital business from our traditional businesses, and we found that was the only way to make it work. So we've had some good success. We've disclosed more than we've ever had in terms of that business and how we're beginning to generate policy sales over the internet on. Basically, you haven't heard anything I've said. So. Can you guys hear me now? Ah, there we go. I'm not going to repeat myself. So basically, Aviva's a large player in the insurance space in the UK. We have done some interesting things in the digital space by totally separating our capabilities and funding from our traditional businesses, probably something that you might find interesting if any of you are in traditional financial institutions. So thank you very much for having me.
Excellent, that's okay.
He has one of the most fascinating labs in Singapore.
Yeah, thanks for that.
Well, I wouldn't know.
Welcome to join.
He never sent me an invite, but we won't talk about that. Okay, well, let's continue with you there, Chris. So we hear a lot about FinTech, but why do you think it is so disruptive to our industry, to the finance industry?
Well, the interesting conversations we have with the MAS is interesting because if I look at what we're doing in the UK compared to what we're doing in Singapore, it's quite different. And it depends on the backdrop to the marketplace and whether the customers are going to adopt a different way of doing business. In the UK, everything is intermediated. It's pretty much 100% intermediated. So people buy insurance through banks or IFAs, that's about it, or brokers. So we felt there was a real opportunity to make it just simple and transparent and right across all the product solutions that we offer. And now we make it really simple. The exam question was, don't ever ask a question that we should already know. And the idea was to offer pre-underwritten, pre-priced offers to customers that were already on our platform. And that's had an immense difference. So we'll sell close to 1 million policies either on our app or over the internet this year. And next year we'll probably do 2 if we do it right. A lot of foundational work went into that. For us to do that kind of thing through traditional channels would require a huge amount of manual labor because it requires you to go out and negotiate terms and conditions with traditional human beings, which are advisors. Plus, advisors don't typically work right across all the products that we offer. So just to offer customers a one-stop shop was not possible. In Singapore, it's different because actually advisors do advise right across the composite. And actually, that's where we're making our first play here in the new world. But going forward, clearly, we want to take that same concept that we've built in the UK, drop it into Singapore, but that's going to be lagging what we're doing on our home market. And the challenge that this gentleman has put forth to me is if he can buy all his insurance on an app, that will be a happy day for him.
And pay one premium.
Pay one premium, one statement, right?
And what about yourself, Mahanti?
Sorry, I forgot the question.
Oh, that's okay, mate. Stick with us.
I'm listening to him.
I know, that's really good. Why do you think it's so disruptive, FinTech? What are you seeing from your kind of view? You have quite a high-level view there.
Sure. I think when I joined this job, I think it seemed FinTech is a disruptive thing, but I think it's something to do with the definition of FinTech. I think at least I want the crowd here to take away one thing, the right definition of FinTech. Then it'll look less disruptive. If you go back to 5 years of FinTech history, it's all about, after the global financial crisis, 2 things came up: simplified payment architecture and lending to people whom banks stopped lending. He came in there. So these are the two blocks of opportunity FinTech created. And then it ended up with the financial inclusion. India did the other platform. they created a lot of technology. I think when MAS started thinking about the broader strategy, we took all this technology and started applying across all asset class, whether it is financial market, insurance, or trade finance. When you apply this technology across all the asset class and financial sector, it looks more of productivity, efficiency gain for the industry. So when you look at the current portfolio of fintech companies, 80% are working to help the banks to succeed. And remaining 20% are working to compete against bank in certain areas, which is a very healthy ratio to think about it. So I don't see fintech as a disruptive piece. I think what's enabling banks in the sector to be far more efficient.
Do you think that's changed over time? I remember when we started seeing, not the first wave, not the PayPal, but the ones after, they were very much talking about we're going to kill banks, banks are evil, blah, blah, blah.
I think that because the entire, if you go to any conference, any panel, fintech means Alibaba, PayPal. I think that's not fintech. It's just a technology, the enabling technology to make payments very simple. But I don't think we're going to move a banking asset out from a bank because they don't do payments.
Hundreds of millions of customers would disagree with you in both China and the US.
Oh yeah, I'm sure. I think that's because both India and China are playing in a different space. For MAS to put a much broader role is to take this technology which China and India is doing great and apply it to other sectors. I think that's what we're looking at. Of course, the game is all about platform. More people you have on the platform, better to cross-sell. But there's a reality into this. You go back and look at China's latest story on the lending side. It's a disaster there. So things have to start looking more holistically when you apply fintech.
There's about 4,000 peer-to-peer lenders up there now.
And huge, the numbers are staggering, the likely default rate.
And financial services haven't had any calamities or any financial crises recently. So
Yes, the global financial crisis did create more defaults than.
Define recent. But yes.
let's see, last week? I don't know.
You know, why do you think they could be so disruptive, John? What's your view?
Well, I mean, I really agree with Mohanty in terms of, at one point, everybody thought fintech was simply, aiming for banks with big targets on their forehead, butts, backs, hearts, everywhere. And it's much more collaborative and cooperative. Every major bank that I know of has a fintech incubator or several of them. Some of them have multiple ones around the world. They are clearly going to be beneficiaries. And I look in my niche of the market, which is disrupting or innovating in the venture capital industry. So yes, it's about time that venture capital, which for 50 years has disrupted everybody else's industry, gets a little disruption itself. Okay, it's just fair, it's karmic, it's the way that the world works. But on the other hand, I come from Israel, and even I don't have that much chutzpah to tell you that we're going to take out venture capital. We want to work with them. Right? We want to invest alongside venture capital, alongside angels, and we simply want to democratize the access to all these private deals, which are absolutely critical. If you're not getting into private deals, then you're not getting your portfolios, due in this world. So it's not about taking out all the incumbents. It's about improving access, bringing technology to bear, and in our case, democratizing access to an asset class.
Okay. Over to you. Why do you think they'd be so? Why are they seen as disruptive? And what sort of disruption do you think we'll see moving forward from fintechs?
I guess I would say the answer is kind of obvious. I think that financial services have done a terrible job providing value and customer service in almost every possible area. They've shown themselves to be terrible sponsors of our finances in so many different areas. If you look at time, value, or convenience, I would say that almost every possible financial service fails miserably on those categories. If you look at brand value from a consumer perspective, name one bank that is anywhere in the top 100, and I'm talking about positive, not negative brand values. I just feel like it's very, very obvious. There are plenty of failures in startups, and there's plenty of problems in lots of different financial services, large and small. But to expect that the existing incumbents in financial services will be in the same position in the next decade or two, I think people are smoking something.
Okay. Be people in
Sorry,
California.
my little bit too on the edge about that. Maybe I should be a little bit more clear. But
Well, I'd love to agree with you, but I can't. Maybe in private.
That's
yeah,
quite all right.
And so Hill, what's your point on this?
FinTech, at least its advent in India, has changed 300 million lives already. And these are 300 million people who didn't have any banking access, any formal financial services. All the things that we sit here and take for granted did not exist for the entire equivalent population of the United States. And therefore, I respectfully but violently disagree with the two of you when you say FinTech is about PayPal and eBay. To me, it's about giving my people bank accounts and giving them the ability to store their value securely, not get shanked by sharks, and essentially the ability to live their own lives with dignity. And this wasn't possible before mobile phones, before the internet, and every time the cost of data goes down, even by 10%, the active usage jumps by the millions, by the tens of millions. So we're hungry. We're craving for ways to store, transact, and build wealth for ourselves. So FinTech is disruptive in every possible way you can think of, from buying a pan at a small mom and pop store. Pan is a nice little nut after mint if you've never had it and never been to India, which will cost you like 5 rupees or 20 cents or less than that. Sorry. Right from that to getting loans, getting insurance, getting all the things again that we take for granted. It didn't exist. So yeah, it's immensely disruptive. It changes lives.
And to that point, you've talked a bit about Aadhaar. What do you think a country needs as a national infrastructure, and what do you think the regulators' role is in supporting FinTech? Is there some countries which naturally see faster FinTech growth and others see slower, and why is that really?
Well, I think it's a bit disingenuous to think of growth as a linear trajectory, right? Faster and slower. I think radical changes happen in steps. And I'm very proud to say that currently, at least India has the most advanced public digital infrastructure for financial services built on top of the Aadhaar. If I were to kind of give you an example, there are 1 billion of these numbers now. They're like Social Security on steroids. So essentially, you enter a number, and to apply for any financial service, you need to fill a form and sign it. Right? That's par for the course. Digital, physical, it doesn't matter. On top of Aadhaar is a layer called, are multiple layers together called the India stack. The first layer is called eKYC. So you enter your Aadhaar number, and it's a bit Orwellian, but it's also, when you think about it, Facebook and Google are far worse, so it's not that bad. You put your fingerprint or your iris scan, and the entire form gets filled out with all your details, your name, your address, your date of birth, your gender. And then once that form is filled out, you can digitally sign it. And therefore, your application is submitted. In fact, if you could roll video 1, I'd love to show you a 1-minute video on how loans are happening right now in India. It's a snapshot of an application. So this is one of our portfolio companies that's working with the India stack. It's a loan application. Essentially, firstly, language is a big thing, so it's in Hindi. You apply for a loan amount. This is consent for data sharing. And then you essentially enter your Aadhaar number and your name. That's kind of like authentication. You get an OTP, which is linked. Your mobile number is linked to your Aadhaar number. Moment that's done, your KYC is done, so your proof of ID, proof of address is done. You get instant loan offers, and then you essentially, this is the signature part. You sign for the loan, and you choose which bank it is. Actually, this with UPI gets even more simple. You don't even have to remember your bank account number. They're virtual payment addresses. And you essentially give an approval for a loan agreement right there. And boom, you're done. And this is for small business loans.
Wow,
this is the way it's working now.
So Neil, because that's an interesting point, because what if I can redefine the disruption it's not the banks who should worry about disruption. It's the large technology company which has built this enterprise technology, given the banks to run old platform. If you look at the banking, the software revenue bills of large tech company, 40% comes from banking industry. And banks spend $500 billion IT spend, and they hold the oldest platform. So they are going to get disrupted by small tech company working behind these engines.
Yeah, doing amazing stuff.
They're doing great stuff. The middle office, the back office, the entire re-architecting the platform by small fintech, they are going to disrupt the big enterprise tech companies.
Like the Mises, SunGard, Fiserv,
Yes,
FIS.
so they should be more worried about some of the structural change happening.
Because I suppose they were the original fintech company.
Absolutely,
in that phrase. They supplied tech and still do great technology.
Absolutely. So there'll be much more democratization of the solutions to small companies.
Okay.
So in our area, the question of regulation is sort of acute and important, because when I started my company, most of my friends, their reaction, the smart ones, was, I'll be happy to bring you kosher food to Leavenworth, because that's where you're going. Leavenworth, for those who don't know, that's a federal penitentiary in Kansas, where you don't want to go. And the bottom line is that how could you take a private company, a private transaction, a startup, and crowdfund for it? It's one thing if you're crowdfunding for a bad singer who wants to cut an album, and yet she promises to send you the CD when it's ready and she doesn't do it, okay, big deal. But if Bernie Madoff got a hold of, or the next generation of crowdfunding, and there's no regulation, what do you do? So there was the Jobs Act in the US in 2012. It took the SEC almost 4 years to come up with 600 pages of regulation. We've just now started what's called Title III crowdfunding, and it's got so many different layers of complexity. But on the other hand, this is inexorable, right? In other words, you have to be in a situation today where you open this stuff up. And if you look, for example, at what is the most boutique-y, closed, guys-only kind of business, it's venture capital. It's the kind of...
Definitely guys only if you look at this panel.
Well, and you look at, 93% of venture partners are guys, okay? But it's been such a restricted asset class. If I could get slide 3 up, just I want to show you one slide, okay? Because this is why this matters so much. If you want to get returns from your portfolio, you have to be in private companies. This is a famous Mark Andreessen slide. And it shows in the gray the kinds of returns you made in investing in public companies in the good old days. So while the gold, which is the private returns, we've always made money in private returns, right? You can make hundreds of times your money. But if you had bought Microsoft at IPO, okay, you could make 600 times your money. If you bought Oracle, you made 700 times your money. Flash forward now, and what's the best you get? Facebook. Great investment, great company, but from IPO price, 4 times, 3 times, okay, it's all gone. So everybody and their kid cousin wants to get into that gold. The problem is that until now, it's been a few thousand people at best, okay? That's being generous. And so you have, in America alone, 10 million accredited investors, people with $1 million of investable assets or $200,000 income across Asia, tens of millions of people who should and need to put this into their portfolio. But how do you do it? So it puts these regulators, with all due respect, I have a lot of mercy for them, in a pretty unenviable position. Because on the one hand, they know this, and they want to get these people into the asset class, and we need the money in the entrepreneurial companies. But on the other hand, they got to prevent fraud, and they got to regulate it. So these guys have been way ahead of the.
And you got it right.
They've put out consultation papers, and they're working, but there is a role for regulation here. The question is that we have to figure out exactly what it is. It's a little complicated.
Yeah. Yes.
And I wouldn't like to be a regulator at the moment. I think for years it's been maybe a bit more linear. Technology hasn't accelerated that much, or finance, and then suddenly, bang, there's been a big bang. Suddenly tech companies are making money, e-commerce companies are making money. They're growing from 0 to, millions of customers very quickly. What do you think, well, I know what your role is, but what do you think the role of regulators generally should be around the world?
I think historically regulators have been back-running innovation. They're running behind the process of change, and they react quite late. So that's you end up in a consultation paper, thousands of paper. After 4 years, you figure out what regulation should be. I think the shift which MAS is making is around running together, so that we do a lot of experiments together with the industry and build smarter regulation. So if you look at the entire blockchain discussion, there are a lot of things discussed, but we are the only regulator who has started experiments with the industry to understand do we really need to regulate to start with. And so if you understand it better, the regulation will be lighter, and in that process, you'll see a far more simplified regulatory framework. And this question of experiments, and be more smart in your regulation, or else you'll not figure out the million fake accounts of the bank in the news recently.
That would be Wells Fargo, in case you've forgotten.
You said it with 5,000 less staff now.
By the way, that was going on for years before we actually had anything hearing about it. 5,000 employees.
The head of that division got a huge bonus and payout.
Exactly, yes.
Not sure how that works.
That's the real
Rewarding
problem with
financial
FinTech.
malfeasance and keeping it private. So that's the job of a regulator, perhaps, is to bring some of that to light as well. I think one thing about the financial regulators, we tend to focus on things that were problems 50 to 100 years ago and not the problems of today. The problems of today are more likely that mid-sized banks have terrible IT security and are subject to incredible amounts of fraud and scam and blackmailing, which they are probably not reporting publicly. I would profess to you that this is something that's not very obvious. Bad UX design is actually problematic, because when you have financial institutions with bad UX design, what do people do? They write down their passwords, or they put them in very insecure places. People can't access those things. If you don't provide access to people who are 300 million people in a country, I would say that you're doing a terrible job as a financial regulator. So sometimes ensuring that banks fill out their records and are audited, that's maybe one thing that we definitely need to do, but there's so many other things in today's age that I don't think financial services are coming anywhere close to doing. And the SEC was basically an outright revolt against the American people for 4 years in not implementing, the Jobs Act. That's just absolutely crazy. If anybody, was your boss and said, "Hey, I want you to go implement this system," and then you fight with them for 4 years on implementing that system, they would get fired. The SEC should have been fired for not implementing the laws that were passed by the Jobs Act. It's just crazy that people seem to think that all kinds of laws that were created for a small group of people 100 years ago should apply to mainstream public now. It's
By the way, I think Dave's point apropos passwords and UI design forces you to think completely out of the box. Like, why passwords? Why any passwords? Technology today is there already, where you can get rid of all of that crap.
I can use my thumb on my iPhone right now. It's probably far more secure.
But the thumb isn't, by the way, they can take your thumb off, okay, or your eyeball or something. We've all seen that in James Bond. How about behavioral biometrics?
Sure.
Literally, we have a company that's now supplying major financial institutions worldwide called BioCatch that basically watch the way that you type, use a mouse, and touch. And each and every one of us and every person on the planet has a unique signature. And you can just simply compute, and it will know who you are without having to do any of the,
By the way, just to make it, so MAS as a regulator just opened the sandbox for everybody. So if you want to experiment and work on the regulation, come to the sandbox.
All right.
So we are probably the fastest way to do things is reach out to that process.
Do you have a bouncy castle as well? Or just
You can have the castle and let the process come to us.
yeah, okay. That's good.
I'm sorry to interrupt the regulatory beatdown here. I have a much more charitable view of our of the the team building the systems in India. They've actually led from the front, and like you said, you're to your point about UX. Not only have they gone beyond fingerprint scanners, which are actually terribly expensive and computationally not even that accurate. In fact, there is no proof to show that fingerprints are a sufficiently high grade of security to ensure banks. They've actually now moved to iris scanners. And iris scanners sound a lot fancier than they actually are, but they're actually infrared cameras, which you can get for $2 a pop in China. So what matters is the software that's running it and the encryption that you have after the hardware. So and therefore, the system that I described, if you're applying for a loan or making a transaction, you just look into the phone, and it's done. So, the whole idea of leapfrogging wasn't really possible in this whole paradigm of desktops or laptops or these kind of things. But once you have a personal device and you have biometrics, it allows you to really remove all the friction away. And when you are building these systems, which is public, digital infrastructure, they have to be built the way developers build them, which is make them API-able, expose these APIs, put out documentation so that everybody can build on top of it. There is a set protocol for building technology on top of technology. And what I think our regulators and the team behind India Stack have done very successfully is begin to leverage that. Being based in Bangalore helps.
There's one or two developers there, I hear.
Yeah, a couple. But I think that model will serve as a blueprint for regulatory authorities across the world going forward.
API, Chris, would you like to comment either on infrastructure or it seems we're moving a bit into banking as a service or finance as a service here with open architectures?
Yeah, absolutely. I think right now, we haven't advanced beyond our own closed infrastructure, and that's just normal sort of development phasing. At some point, we're going to have to go open architecture, open APIs. We've got a project in our garage called Plug and Play. Basically, we should, again, the whole kind of exam question is how do we never ask a question? So if you're on Trivago, putting in your dates for a hotel in Warsaw, you shouldn't have to ask that again, right? So just to be there and have an API that people can plug into so you can know what your travel insurance cost is would be a pretty convenient outcome. So the other thing that we want to pilot is, as Amazon is a pretty decent online platform purchase for the UK, they're going to launch Alexa soon. Alexa is their version of a Siri. And actually, we've seen a demo. It's pretty cool. So we want to be the first on there so you can go, Alexa, ask Aviva what my pension value is today, and just kind of get it so bloody seamless. That's going to be, I think, next gen, and just start testing and piloting and see what happens.
Do you think, some of the concern in the industry is, will finance end up as dumb pipes? And so if things are delivered via an API rather than a website or a mobile app with the brand on, and we know that telco has suffered a bit from that, that they're basically their pipes are just used for data, and people like Skype, they're using them for phone calls essentially, but on a data basis. Do you feel that there is a real risk that financial organizations will just end up as kind of back-end infrastructure and the cool, sexy stuff will be delivered by tech companies or
I don't think we've got a problem with that. I think if I think about what we're doing in China, there's no chance we can beat Tencent, for example. With 800 million users going back a minimum 12 times a day, everything they can do on that platform, right? So why not partner with them? And we were one of the first that has a seamless insurance product where you can buy on WeChat Pay. We just kind of messed up on the UX on the first iteration. We had a 98% drop off at one point. That's when you go, Jesus Christ, right? But at least we figured that one out, and hopefully that's a learning lesson and we improve on how we do things. But the point is you don't fight those guys. You want to wrap your arms around them and go, okay, how can I take advantage of the fact that you've got an engagement platform that's extraordinary? They just spent $9 billion together with Hill House to buy Clash of Clans because they figured out that their 25-year-old millennial male spends 25% of their time playing games. So they're thinking about share of time, not share of wallet. They just want time on their platform. Then they'll do everything on there. So I think that's a new paradigm in terms of how we think about dominating people's lives. Maybe that's not the right terminology.
Look, it's all about that frequency of engagement. And
Absolutely.
And the problem that the FinTech incumbents have is, with all due respect, how often do you want to engage with your insurance company? Okay, I'd like to check my pension once a year, once a month, maybe. Okay, but I'm not checking it like I'm on, WeChat or on WhatsApp. And
maybe Tinder should be a new platform for insurers.
But no, what's interesting is I was just at a partner today, UOB.
I've heard of them.
Another bank here in Singapore. And they're launching dining services Okay, in other words, they have a very, very interesting new, where they're basically, because of their payments and whatnot, they're going to get you, and Singapore food is really big. It's big for me everywhere. But the bottom line is that, this is a way for them to get relevant and engaged. And you're going to see all kinds of interesting mashups with the sort of far-thinking incumbents who realize that it is about mind share and frequency and not just wallet share.
Well, I disagree. I think the job of financial services is to get the hell out of the way. Just don't get in my way. I don't want to engage with you. Just facilitate my transaction and get out of the way. Because there are people who do dining experiences or gaming or all these things way better than banks and financial services institutions ever will. Their job is to they are the oil in the wheels of the system, right? Your job is to lubricate and make the machine run faster. Your job isn't to try and show that, oh, look, here are all the fancy things that I can do.
I don't disagree with you. The point was, because we're not doing that, you want to partner with a platform that provides that. When they're on all the time, you want to be always on. Make it incredibly simple for them to do what they want to do, which is your point. Then that's hopefully a much
How do
better
you
form.
prevent Google and Facebook from being your bank?
You don't.
Regulate.
Okay, in other words,
going to
So
be.
that's sort of the elephant in the room.
I think
Right?
it's naive to believe that just you put an excellent payment system, banks will stop operating, because it's too naive there. Because banks have done a terrible job in providing great customer experience. I agree with the point that they should be operating behind as an engine rather than trying to show their face every time you pop up. I think banks as a physical thing will vanish in time to come. But there are serious back office, middle office activity banks perform, the risk assessment, the modeling, the decisioning. They're very high value, complex processes. So those need real technology, those need real investment. So I think there has to be a broader discussion getting beyond payments and platforms and gaming discussion.
The problem though with these back-end systems, right? You talked about risk analysis, decisioning systems, all of these, is that every financial institution is trying to build its own system.
No, they should not. That's what my point is, that the reason they're not actually building themselves is a large enterprise.
Yeah, they're getting some
someone
system
doing it.
integrator to do
So
it.
they really don't build anything.
Yeah.
And that's my point. Those system integrators are actually going to get disrupted by smart people building better solution. As long as banks have the right open architecture,
I think we're not
the
going
open
far enough.
APIs.
Regulators are going to get disrupted. You're not thinking.
I think that's
Bitcoin.
I think
in certain countries
I think that's
is
the
not
holy
going to
grail.
require-
That's the holy grail. I think eventually should be there. But I think the point is the banks open up the architecture beyond, on top of the housekeeping. They will plug in great solutions together. But again, let's not be get in the play to the crowd by putting this fanciful statement that this is going to happen tomorrow by just putting a payment architecture there.
Yeah, I guess the point you were making before about, we have to hold our regulators and hold our financial services accountable to user experience, to value creation, and to, provide some protection against fraud, whether that's
I'm not
happening.
sure the regulators will play a role in the user experience. I think that's a job of.
I mean, again, from the U.S. market perspective, I find it highly, disingenuous when we're trying to prevent people from investing in small startups because they might be defrauded in some cases, when in the last 10 years, how many people were defrauded out of money that they put in their house because we were not doing a very basic job of understanding what's an appropriate amount of borrowing that they can do, and are the people who are putting together securitization packages for home loans, are they doing a good job? When Moody's and others can't be trusted to actually provide a credit rating, then why are we worried about some small startup that might lose my money by investing $1,000?
One bad US example will not make everything bad. I think we got.
I don't think the US has a corner on bad regulatory oversight.
They're saying there's risk everywhere, essentially.
Absolutely.
And regulators are trying to move, we have discussions about moving to a risk-based model.
And we are also looking at RegTech as a big portion for make our job more efficient. I think we are not immune to this FinTech opportunity.
I think it would be actually interesting if you look at some of the ideas behind Bitcoin, and I don't think Bitcoin is a panacea because, again, UX is a problem and adoption is still very small. But one of the interesting parts about Bitcoin was there was an incentive system built into the product to actually create security. And I think what we're experiencing now is that there's going to be independent actors that are going to be defrauding us all over the world. It's happening right now, and it's unreported. And we need to start building in incentives in our financial structure to decentralize regulatory actions. If we could actually involve everybody, every nerd on the planet, if we could involve, let's just say unemployed Russians in helping protect our financial security. This is kind of blowing your mind, right? Rather than like, if right now they have an incentive to do that because they're going to make money. If we could give them an incentive to protect the world's financial regulatory system, they might actually cooperate and do that.
There seems to be something about FinTech which gives birth to these most unbelievable mini bubbles that go really big and capture people's imagination for about a year or two.
You're talking about Bitcoin?
Well, Bitcoin.
Bitcoin is not a bubble.
No. What's
Cryptocurrency in its implementation might be problematic, but that train is coming. You will be run over if you do not understand that that is coming.
I'm not denying the true faith. Okay,
it may not be Bitcoin. It may not be Bitcoin.
What I'm saying is that
I'm a practical nerd. It's not necessarily Bitcoin.
For a while, it was all Bitcoin, and then Bitcoin sort of paled a little bit, and then everyone said blockchain. And the entire venture herd and all of the smartest people in the world went to go invest in blockchain. No venture capitalist today will take a look at any blockchain company. They're done with them.
$1 billion.
No, and then it was peer-to-peer lending. Okay, and the peer-to-peer lending, 4,000 lenders, and now we've watched what's happened to Lending Club. Okay, and so we just got to step back a little bit, because while there is huge potential for disruption and change, and it's happening, it's just that any one of these little pieces, and they're not little, they're big pieces, okay, are not coming tomorrow.
No, John, but systemically, it's not possible for financial services things to not be bubbles, because we're all sitting on mountains of capital and nowhere to deploy it. And suddenly, when you see financial services, particularly you talk about lending or you talk about any of these things, right? They are hungry for capital. They are capital guzzling machines. So the more I deploy, the more chance, where else are you going to put $300 million or $1 billion? You put it in a balance sheet book, particularly in India with the interest rates where they are. If you just are not stupid about the way you disperse your loans, which very few people are capable of doing, you can make a good amount of money. It's a structural issue with financial services. It's got nothing to do with tech per se. And the moment you say, I'm going to disrupt this system and you're going to be able to deploy this safely in 6 months, you can deploy $300 million. Everybody, it's like investment Viagra.
Couldn't agree more. Like, we should invest in Viagra. I think I need some of that. I think that
clearly
disruption itself is a very loaded and charged term. And all I think we're really talking about is better products and services. And whether those are delivered by large financial institutions or small startups, I think that we all want better products and services. And the reason people are using Google and Amazon and Facebook and PayPal and Apple is because they've delivered a better product, right? And I'm sure they could be disrupted by other startups as well, which is why Facebook spent almost $20 billion on WhatsApp, and why Snapchat still hasn't been bought out by Facebook. So I don't think that it's only going to be large or small institutions, and there are probably some large banks that are doing a good job. But I think that we need to rethink, what types of areas we need to be spending time on in a regulatory environment. And it sounds crazy to say, okay, design and UX is so important that if you don't have a good design or a good UX, we're going to actually close your doors. That sounds crazy, right? But that's actually what we should be doing.
You want to regulate taste?
No, I'm just saying ease of use. If I can't log into my password 15 times.
This looks quite, we can always argue in private. For regulators to design, to control UX looks a long shot.
I'm stating an extreme just to get us thinking about where are we headed.
Right. The other way to look at it would be, and I think these guys are thinking about it, is how do you create those lubricants to an end-to-end process that as a standalone private corporation is extremely difficult to do. So having access to government databases around identity, whether it's facial recognition. So if I go through immigration machines, it's two-factor, right? If I can get past the privacy bit, get the validation, ideally it's actually done by the government, and we plug in API-wise. into that system, and it's done.
Spectacular.
I think it's
how do you
As
measure-
a smart nation is doing it, right? I mean, that's the point.
Does everyone get
India's
access?
done
Every startup gets access to that?
No, I think one of the things we're looking at in the months to come, how do we put the national identity into our infrastructure? I think we talked about that 4 things government has to do fintech to make it much broader. One is build a national identity which is applied across all sectors. Like India built a billion platform. It takes hours. It takes more than an hour to get through the immigration process because that doesn't work there somehow.
Right.
So there is a way. I think we need to look at infrastructure applying to all sector. One. Second thing, we would ensure the schemes and policies are designed to support a broader, what I call as a lubricant to the process of innovation. That's what we are doing. Lastly, I think we didn't talk about it, is the talent. With all this opportunity, one of the serious shortage we are seeing globally is the talent base. And we're going to talk about, as in a fintech context, do we have the right talent? We have seen a lot of evangelists, a lot of people are talking about fintech. We don't have people who can build the systems globally, a few there somewhere. And they're more concentrated to payment infrastructures and all these things, not in the real deep science, deep engineering. We've got to find a way to bring them to the structure and hopefully re-architect the financial sector in a way it should be designed for people plugging from outside and hopefully get the sector much better.
But there's been some very interesting discussion around how regulators can essentially, I don't know, dictate or rather refine UX, right? Or nudge people towards UX. And if you could roll slide 2, which is built on top of UPI, which is an interoperable payments interface. It's a government-run switch, which actually has a virtual addressing system. You don't have to enter anybody's bank account details. You don't have to do any of that. And with Aadhaar-based authentication, essentially send as little as 10 rupees. If I can just get that video up, I'd love to show you how that works. So this is actually a private application built on top of UPI. It's called PhonePe. It's run by one of India's largest e-commerce companies, Flipkart. And essentially, he's put his virtual payment addresses. See, Nick at YBL, if you actually download this application and enter this address, it'll go straight into his bank account, and it's linked to Aadhaar. So this is his, you can add a new bank account, do all that. All the banks are coming on board. They're falling in line because they have, frankly, no choice. And also, this is the next step, really. And when he just hits send, this is literally your phone book. And you choose somebody from your phone book. He's sending money to himself because my buddy is a bit of a cheapskate. But, and that too is doing 10 rupees. But this is live, right? I wish I could have demonstrated it to you right now. But unfortunately, it's only on Android, and I'm falling behind on my iPhone. But there you go. That's actually confirmation. That SMS was confirmation from the bank saying that you've received that money. And it's that quick. This is live. So, and right now he's doing a mobile recharge. You can pay. So it's peer-to-peer, peer-to-merchant, completely interoperable, pull money out of a wallet, send it to a bank account, any which way. So this is fairly modern UX. It's not getting in your way. It's as good as any app, and it's modern because it's a private entity building on top of government infrastructure.
National infrastructure.
Exactly.
So
public,
far, we've
public
seen,
infrastructure.
was it
I would pay
identity?
$15 US to have that privilege in a bank.
Identity, national payment switches, smart regulators. What else do we have?
What you have is a really interesting case in FinTech in particular of non-US innovation leading the way, okay, which is really a refreshing.
I love that that's a category. Innovation isn't the domain of Silicon Valley.
Yeah, but
I think you're assuming that
in Silicon
Facebook
Valley
and
they
Apple
believe it is.
No, that's true.
US
Have you ever been to China?
I mean, well, no, but you look at most entrepreneurs in the Valley, and they're basically, in my opinion, living in a house of mirrors, where they're basically trying to create and innovate for their peers, their friends, people like them. And then all of a sudden you get someone like M-Pesa, in Kenya, okay, or what you guys are doing in India, and it just is a complete game changer. And part of the problem, which Dave gets credit for being part of the solution here in your 500 startups, is that there's no democratic flow of capital, okay? For example, in India, there's such a lack of venture capital in terms of how much money on a per capita basis is there in India for investment. You know, even, it's extraordinary. And in Africa, there's no capital.
Yep.
Okay, and even here, okay, what's funny is that there's, I just heard the number today, there's $1 billion being invested in Singapore startups. In my little country, Israel, there's $6 billion. So there's a disparity because there are certain places.
We just started, 290 startups. So
Yeah.
We're going to come and help.
So you have 5,000 startups, we have 290 startups. $1 billion.
The China government investment funds $336 billion US,
Right,
which
so-
is the GDP of Denmark.
And look at, you know, how they do on messaging. It's you know, I think WeChat is a far superior messaging fabric than anything that the US can throw.
So do you think innovation, and especially tech innovation, is moving from west to east? Or has it already moved?
I don't think, I think we should categorize by west to east. I think the end of the people who are in Silicon Valley are some programmers from this side of the world. So it really doesn't matter where they sit. I think
The people who are running Google and Microsoft right now are brown.
yeah. so thank you. So
I don't know if you can take credit for that. I'm just observing that.
I think the talent will be much more diverse, and innovation will be. I found very fascinating. A lot of the innovation comes from the developing world because they're building infrastructure which doesn't exist today. They're leapfrogging traditional infrastructure. So, and in fact, a lot of the technologies India developed and M-Pesa developed are actually being used in the developed economy for their own purposes. So there is an opportunity developing countries can bring by leapfrogging the traditional structures, and that is a huge opportunity for all of us.
Because usually the technology and operational cost is very, very low.
Yeah, exactly. So they have to deliver highly efficient infrastructure for very lower segment of the population. So their cost efficiency, and it has to operate in high frequency mode. So these are great technology delivering solution to underprivileged, and those technology can be used for upper value chain financial services.
Excellent. And so talking about these different areas then, you know, where do you think the next kind of global fintech hub? London keep making claims that they're the fintech hub of the world. They might have shot themselves in the foot with Brexit. But in fairness, any country where they did a crowdsourcing campaign in the UK to vote the name of a new boat, I think it's an icebreaker, and the winning entry by about 1,000% over the number 2 was Boaty McBoatface. and so then these people who voted about Boaty McBoatface went on to vote about the future of the nation in Europe, and obviously we got that result. But they talk about the fact that they're the fintech hub of the planet. Where do we think? Maybe start with you, Chris. Where do you think it is or should be?
Well, it's got to be London because we're there. But all joking aside, actually, what is very real? Because I'm on a panel with some other firms that try and promote digital reciprocal investment between China and the UK. When you get to Silicon Valley, you can figure out where to go. When you get to Singapore, you can figure out where to go. I'm sure it's the same for Israel. You get to London, it's a mess. It's not easy to figure out where to go. And actually, that's part of the problem. So, you know, you need a bit of a map to figure out where these guys are. Now, it is a bit of a hub. It's attracting really good talent. I can't, frankly, predict what's going to happen with Brexit. Based on your accent, I'm assuming you're a Brit, so am I right?
Thankfully, yeah.
Yeah, so, you know, some really smart people in technology come from the UK. But actually, we've been able to find really excellent talent, and we're trying to export some of that talent into our various digital hubs around the world, and vice versa. So we're trying to send people into different markets so that we can share some of those experiences. So to the earlier point, I think WeChat's way ahead of WhatsApp, for example. It is what it is, right? So what Facebook announced that they want to do in WhatsApp, WeChat has done by a country mile. You know, for those of you who don't know, so during Chinese New Year, there's a custom to send red packets. And on WeChat Pay, you can do virtual red packets. This is when they really exploded. And a year and a half ago during Chinese New Year, about 2 billion red packets were sent over WeChat Pay. This year, it's no official number. I've heard anything from 9 to 12 billion transactions.
Which is more than PayPal does in a whole year.
Exactly. Right? And then you hear about the Alibaba 1111 sort of campaigns, right? It's extraordinary what they do. The point is, they make it so bloody easy. If I wanted to sell bottled water, I don't have to program an internet website anymore. I take a photo, I upload it to my WeChat account, I put a price on it, I send it to my social network. They want to buy it, they say, I want to buy 50, so pay me on WeChat Pay, we're done. I've just done internet trading.
That's true.
Right? So I mean, they fundamentally changed the game. And that's what we want to tap into, no point fighting them. Right? So, I can't really say where's the hub. It's hard to predict where's the hub.
But I think you just did. I think the conversation isn't about a physical location like London or Singapore or Hong Kong. It's about WeChat versus WhatsApp.
Yeah,
it's about,
great point.
Amazon versus Google. I don't even think it's about handsets. We're not sitting here talking about is it Samsung or Nokia or Galaxy. We're actually talking about the software platforms.
Yeah.
I think that's really where it's headed. And I don't think there's going to be banks that we think about in the same way in another 10 years.
That's true.
It's going to be where do you log into every day? What's your frequency of use? And where do you spend those currencies? I don't know whether they call them currencies or not, but my extra minutes, my extra game units, and where do I buy my next meal?
But I think you're completely right about that. But I think that people still will live in cities, and what's going to be more common is that companies will be multi-hubbed, as they develop. And today, yesterday I saw a company getting ready to invest in, and it's literally a three-headed beast already. It's a company with a headquarters here, development in India, and
so I think that's right on target
in the valley. With now an Israeli investor getting involved.
Right. But this is my third trip to Singapore in the last year. I lived in West Virginia. I've been home to West Virginia once in the last year. It's kind of crazy that I'll go halfway around the world 3 or 4 times a year, but I'll only go back once a year maybe.
But that makes sense because people are different, and there's still different strengths and skills in different parts of the world. And I think that the strongest companies that I'm seeing are those companies that tap into global, multiple skill sets.
Okay, and a final piece, I see that the clock has appeared red. Either the screen's broken or we should wrap up. We're on the 2. So let's put it out there. Who do you think will be the biggest bank in 10 years' time? We'll start at this end. Which company?
10 years.
In 10 years' time, doesn't have to be a bank, but they have to obviously do finance. So which will be the world's biggest finance organization?
I honestly think that company's not been born yet.
Okay.
I don't think it exists today.
If you want to start it, let me know. Got some weekends free.
But yeah, no, I think it will leverage pools of capital from New York, from Tokyo, from London. But like you said, it's all going to be abstracted away from the source of wealth to a platform where this engagement exists. And sure, WeChat is on top today, and Facebook will be on top tomorrow, or whoever else. But in 10 years, that's just way too far out to call it.
Okay.
Yeah, I was going to say I agree. 10 years is a little bit too far to make predictions. If you said 5 years, then I would say WeChat, Facebook, or Google.
Yeah.
Okay, let's do 5 then. All right. Yeah.
I don't think it's actually going to be WeChat because right now they've set their own limitations on their audience. China. And so it's probably only 1.5 billion to 2 billion people that WeChat has access to. I think Facebook and Google have access to 5 billion people. So while the Chinese government is still involved in setting some of those boundaries, WeChat is unfairly limited in where it can go.
Okay, my answer would obviously be DBS Bank.
It's WeChat, Facebook, or Google. That's correct.
Yeah.
I think we just shift our regulation to WeChat. That will make our job easier. So I think it doesn't matter who is going to take it. I think the best will win the game. But my personal choice is Pokemon Go.
Oh, there we go.
Got to catch them all.
So I hope that they succeed in making a bank.
Yeah. Chris, what's your thoughts?
This is my unofficial choice, not as a regulator.
Yeah.
Hard to follow that. I would say John's analysis is right on. I would go with that. But it could quite possibly be not born yet. But then if it hasn't been born, the challenge is how do you get up fast enough with a large volume of users? Because I think that is the secret sauce ultimately.
No, that's never an issue, right? Because they once asked the rich man how did he lose all his money, and he answered slowly at first and then all at once. So that's what happened with Pokemon Go as well. They were overnight they had more users than Twitter. So I don't think time is a problem at all.
Very true. Well, thank you everyone for listening to this great discussion, stroke argument some of the time. Thank you. It's been a great pleasure working with you.